Hello, what a clean swing trading chart looks like. In my opinion, a clean chart will the chart will meet the valley line, will have higher lows at the valley line and show a higher highs at the peak. We are going to analyze two stocks together here to see if they have a clean chart. And like the way we are seeing this stock, for instance, we are on a daily chart here, and I will expect the chart to show a repetitive pattern where it's touching base with the valley and then going up from there. And this, let's see if there is, when there is a lot of zigzag in it, some stocks don't really respect the support line. For instance, this one is respecting this one and then it pull back to this, so, and it's well on that valley line and start going up from there. So in some way it's respecting those valley line. Let's start with the one we are going to analyze, SPGI. So when I'm looking at SPGI, we have this valley line that we like to buy at. So now we are going to see if it's respecting that line, and it has a lot of zigzag. It is a zigzag type of stock, like kind of huge one. But now we are going to see if it's respecting the valley line that we like to buy at. In some way, yes. Although we have this line here that is resting on as well and start going up from there. So I'm not entirely sure if this is supporting the upside wall of the mountain that is climbing, or if that's the new valley. And I don't really want to buy at this line, but at the same time I noticed that it touched base with a 3 years in a row, the past 3 years, and this valley line is not too far from this one, so we could try to buy around this valley line, and if it turns out to come back down here, we buy it again. That is another strategy that I'm thinking about using going into 2026, so that if I wanted to buy and I'm not certain about the valley line to buy at, I can use that strategy. And the way I can do that is either decided to split the amount I wanted to spend on that trade, split it in half and use and buy some, and in case it comes back down again, I can buy some again. That will be another strategy. But some of them respect their sub valley line quite a bit, but some of them don't. And this one in some way is, meeting this one, but it's not meeting this one. So it's not a clear car here. And when it's having those zigzag, sometimes it can make it confusing, but some the zigzag can be very small and smooth as well. You'll have all of those. You cannot just focus on one type necessarily. It's okay to have that variety in your portfolio and keep analyzing them. And sometimes the one that have a very clean chart, you can use them as a benchmark as you are analyzing stocks you selected for your watch list. To condense them, you can use that clean chart as a benchmark to analyze it. I think let me see if this stock will work. Okay, so when you look at this stock, you can see that the pattern was a little bit different from the other one, and this one is respecting the valley line. And so this will be an example of a clean chart for me. Another one could be maybe AZO. Okay, you can see AZO for a while now is respecting this valley line. I'm waiting to buy it here, but it just keep going up from, okay, I bought it. That's what I have that arrow there. Okay, because I just was not sure if it's going to come back down below or not. So far the price is higher than where we pay for it. We are quite close there, but yeah, we bought it. It's a maximum daily charge, so every candlestick is a day. So if I purchase this, it will be last week. Today is November 25, 2025, and we are doing the analysis before the market opens. So yeah, we bought it last week. But yeah, so this is an example of a clean chart as well. And when you are analyzing the stocks that you are gathering to put in your watch list, when you come across stocks like this, flag them. So later, after you have your watch list, if that's a big list and you want to reduce it to a smaller one that you will be analyzing regularly during the year, you can review a chart like this and then watch all those stocks again, their chart, and your sole purpose of that analysis will just be the look of the chart. And then the one that has clean look like that, you can flag them again and pull them out. If that's too short of a list, then you can review the rest to see the secondary one that you'll add to it. But just keep in mind that those type of clean chart will have their challenges as well. Like sometimes you will buy it and it's okay to just let it be because it's not moving too far away from the trend line that it is on. And if you know that is a good pattern and how many years it repeats that pattern, when you buy at the beginning of a new pattern, at the beginning of the cycle, you can just stay in the trade for, the same time frame it did it previously or half that time frame before you exit, because it's just going to continue shooting to the sky. If we go to maximum monthly chart, you can see how it is. That's why I'm thinking that this is so sharp that there is at some point it might come back down here. But yeah, those are risks that I'm willing to take. Buy some now. If I get stuck in it, it won't be the first time. I have stocks like that in my portfolio that I have since 2024. I will just learn from the process. So yeah, but again, let's go back to our SPGI. So when I'm looking at this, yesterday the price went down. The price at the end of the day was lower than the price in the morning when the markets open. I'm willing to buy at this valley line. For me, I feel like that's the valley line. This is 3 years old type of line. Is resting on it. When it left that valley, that peak, it pulled back to this support line, but then went a little bit below it and then start climbing there, but pretty much went up, came back to the valley line again, went up and came back to the valley line. And technically that's something I dislike about some stocks. Like in the past, I could disqualify a stocks based on that, because I like to buy at the valley and sell at the peak. And when the stocks pull, I buy it at the valley, yes, it went up and came back again. In a short period of time, it lingered there, I'm okay with it. But if it came back to the valley, went up and came back to the valley for 2 years time frame, I tend not to like that. But there is something to keep in mind too, because the valley line is kind of tilted up. Let's say you bought it here, the price, the date is on the x-axis from the past to the present, and you have the price on the y-axis from 0 up. So if you buy it there, the price corresponding to where my mouse is 302. A year later, it came back there, I'm seeing 320. So since, even though it came back down to the valley, we'll buy it at the valley and we want to sell it after all-time price new high is reached. So it didn't reach it, it came back down again to that valley a year later. Is a no-no for me. But something to consider is it came back down to it at a higher price, 320. So if you buy it If you bought it at 300, 302, and 320, even though it's still around that same area, a year later, of course, you lost this growth here because you didn't sell it. You are waiting to sell it after the price exceeded that previous peak. You will still have $20 profit per share accumulated in it, unrealized, because you didn't sell it, but it's there. Does that make sense? Even though it's still around that trend line, it will be there at a higher price. A year later, or maybe 6 months later, it came back down. Like from here was what? March, the same year, October. So 7 months later, it came back down again. 342, another $20 got added to it. So if you purchase it at 302, 342, you have about $40 profit per share there accumulated. So let's continue here. So it breached this peak around somewhere here at 481, 2 years later from when it left here. So you can do the math between 481 and 302. It's like over 150 per share. So those are things to consider as well. And sometimes I'll disqualify saying that, well, it took 2 years, it's still around that trend line. Coming back to it without reaching the peak first is a no-no. But it's not just one rule fits all. We can, if we see something like that before we disqualify, let's put our mouse at those different points to see if the price continue to increase to make it worthwhile while you are waiting for it to take off. So that's something to consider. It's not a clean chart to me, but it was worth having in the watch list because it might have some benefits as well of good growth. But now we want to find an entry to it, and we don't know if it's going to be this valley, this line, or this one. This is longer. That's why we are calling it the valley line. It coincided with this one as well in the past, but this one diverged from it in the present. So we don't know if it's going to rest here and continue going up. I just have a feeling like it has been going up for the past 3 years, that at some point it could come back down here. That's why I'm hesitant buying it around here. If this is going to be the valley line, then you'll ask yourself, is it available to buy now? And then you'll zoom in to see what is going on here. So we have this valley line, we have this drop here, pullback that is about the same as this one. No, it's higher than this one, and this one is a little bit lower than this one, and this one is higher than this one. So we do have a sort of a uptrend here around the valley line. But what I'm trying to do now though is, if it touch base with a valley line and start going up from there, I don't really want to wait too long. After 3 higher lows or so, I can make a purchase, because I noticed that sometimes they just pull back right down again. But in this scenario, we have a valley line below that I don't know if it's going to go down to it or not. It reached a new high here, and technically it pulled back down and start going up from here, and we are just going to continue observing it to see what it's doing. We are not going to buy it. And when you are not sure, it's okay to let it be, because you have more stocks on your watch list to, that might be ready for you to buy. So that's something to keep in mind as well, so that you do not get in the trade too early and get stuck in it. So SYK, okay, let's see if it is a clean chart here. Is respecting this support line here for, again, the past 3 years. And yes, it is a clean chart in some way that I'm seeing a repetitive pattern here. You can see this one here. Try to do it again here, and then again here. So, and So it reached a new high somewhere here. We bought it there, we sold it there. We can see how much profit we made in it later, and it pulled back down here and start going up from there. So we can buy some there, but again, I have two other lines below that if it's down there, we'll get trapped in it, and that is decision we might have to make for ourselves. But again, it start going up from there. So, but, and I'm sure this might be one that will be sharp. Yeah, it's climbing up, and just make me think it has been doing that for a while, that is bound to come back down here, and I prefer to just wait on it and buy it here. So sometimes you might even have to leave your daily chart to go to the monthly chart to even see the overall pattern of the chart, to see if you can see the trend is following, the direction is going. Because again, we are choosing growth chart, and some of them can have sharp growth that is worth pausing to see how long that growth has been going on, if there is a possibility it might pull back lower, and keep that in mind as well. So for the past 3 years, it has been on this rise. So we have 1, 2, 3 years here when it came back down, and I have feel like it might come back down here, but now the decision is up to you if you want to buy high or not. But again, we can take a look at it. But again, it could be, well, the reason why we didn't buy it here. But again, if we bought it here, something to consider, it has not exceeded this high point yet. So at some point, yeah, it was a good, we didn't buy it here. But just keep in mind that here the price will be 331, when now is 370. But yeah, so as soon as it's still claiming this, you'll be fine if it's coming back down to it. But if it comes back down here, that's when a purchase here will look like early entry in some way. So those lines are tilted upward. If you know that at some point, if you know that it's going to be resting there and go up from there, yeah, and it has been respecting that line, it's worth buying early, even if it lingered there for a while, being an upward support line. Even if it comes back down to it, it comes back down to it at a higher price compared to where the price you pay for it. If you purchase it close to the line, I tend to buy it after I see 3 higher lows, which sometimes puts me a little bit higher up. And if it comes back down, I could be negative in it. So those are things I had to work in to see how I can stretch the strategy that I'm using, and see if it's okay for me. As soon as it touch base with that true line, buy it. If I'm sure it's not going to go too lower than that, sometimes it might go a little bit below and then continue. So those are things, just like the way here it came back down a little bit before it went up. When here it just touch base with and start going up. So those are things that by just trading the same stocks over and over and over, you might feel comfortable taking those measured risk with some of them. And that's why I just prefer to have a watch list and just continuously trade from that watch list, so that I'm familiar with those stocks and I can take those bold move, buy without a good confirmation that it start going up, and buy at the value line when it gets there, or see a slight turn there and then get in. But again, it will take practice, knowing that it might linger there for a while. I'll be negative in that purchase before I become positive in it. So this is pretty much an example of few stocks that we can use to illustrate how clean a swing trading chart can look like. Especially, I think it's in relation to how you want to trade it as well. Thank you so much for your time. We thank you very much for watching our videos. Thank you for your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C. YouTube channel and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your accounts from there. For more of our swing trading tips, will you please check the playlist in the description of this video. And we are organizing an online workshop tomorrow at 9 a.m. Central Time. Will you please check it out? We'll have the link in the description of this video. If you're interested, will you please go and reserve yourself a seat? And we have, we want a group of 10 so that you can practice. You come in with 5 stocks or 5 companies you're interested in trading, and you will take turn to analyze the stock to see if it is a good one to add to your watch list, and if so, and then you can analyze it again to see if it's well positioned for you to buy anytime soon. You can practice those 2 analyses to create your watch list, analysis to buy stocks, and that's what we will practice. So if you're interested, will you please check it out? And this one is free in exchange of your feedback on things you recommend we include in the workshop going forward, because going forward is going to be a paid workshop. Thank you so much for your time. We will have the playlist in the description.